Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the question box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense for you, and we'll go through some ideas in that regard as we go along. There's some tools in the WebTrader and the AvaTrade Go app that really make the risk management side of things quite a bit easier. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, for anyone who's new to things, what is technical analysis? From a more basic standpoint, it's looking back at the historical price movements and trying to find patterns, movements that look predictable, price levels that might look important to help you maybe predict future movements, with the idea that maybe some of those patterns would repeat themselves, or some of those price levels that look important might maintain that level of importance in terms of support or resistance levels, etc. And as we go through the charts, we tend to do a lot of manual methods of technical analysis within my sessions, where we draw the price levels, we draw the trend lines, the support levels, the resistance levels, etc., and work out trading strategies with entry points and exit points around those patterns and price levels that we find with our manual technical methods. Also, on occasion, we'll put an indicator. Indicators can be helpful as well to help point out maybe when the indicator thinks a movement might reverse or already reversed, whether something might be overbought or oversold. And as we go along, if you have any questions, please feel free to type them in the question box, and I'm happy to address any questions that come up as I see them. From our main website, we can log into our WebTrader, which has the same functionalities in our AvaTrade Go mobile app as well. So whether it's the free signals, the market buzz, the news feature, etc., all of those functionalities are in our app and our WebTrader, which both allow you to trade on your MT4 and MT5 trading accounts. So if we log in here from the upper right-hand corner of our main website, we'll be in the WebTrader platform. And before we get into the technical analysis, as is par for the course, I tend to like to have an idea of what's happening fundamentally as well, and to get a feel for maybe which way the wind is blowing, if at all. Sometimes there isn't much momentum in any one direction. Today, there's not a lot of momentum on the markets. What is there seems to be a bit of positive momentum, positive sentiment, meaning fear is down a little bit today. The volatility index has been down pretty much all day, not in a big way, but slightly. And that volatility index, the VIX index, the slang name for that is the fear index. And so when that's down, the equities, the major indices tend to be going up. The safe havens tend to be maybe a little bit weaker. So the US dollar's given ground maybe today to some different currency pairings. So we can have a look with that understanding that that's kind of the fundamental setup today, is that there's not a lot of fear. There hasn't been anything major other than a bridge that fell down, which was a pretty big deal in the US, but nothing major affecting the markets in terms of specific assets or instruments really being driven with a high amount of momentum today. So we can kind of take a look and see what patterns exist, maybe with an eye in the upward direction on the equities and currency pairings against the USD. If you can find entry points that fit that directionality with the sentiment that's existed today. Really, it's kind of a wait and see going on fundamentally today, because it's not until the end of the week that there's some FOMC members and folks who will talk about monetary policy out of the US. Friday being a holiday for a lot of countries, but there's still some announcements and such occurring on Friday. And leading up to that, there are some economic announcements that will give some more insight as to whether inflation is coming down in different regions around the world, and specifically out of the US. A lot of eyes are focused to see if the data we saw yesterday out of the US, which was housing data that came in weaker than expected, if that trend continues the rest of the week. And I think that's kind of adding to the ability for the markets to be a little positive today with lower fear. The fact that the housing market in the US maybe is finally starting to show some signs that its inflationary pressure might be dropping. And so the idea for some time now with the raised interest rates in the US and other places has been to pull inflation down with those higher interest rates. And maybe finally there are some cracks in the silver lining of the housing industry in the US showing that maybe those prices could start to be less inflationary and help some folks out, and maybe lead to the ability for the US to eventually here lower interest rates back down some. And so that's kind of maybe adding as a backdrop from yesterday coming into today, some positive momentum on the markets and a little less fear about the interest rate situation in the US perhaps. Okay, so with that said, let's take a look then at maybe some of the signals. We could start there. It's a nice tool that we have on our platform, and we can really look at any instrument that we might be interested in. We can start on maybe an index or two. And so we could look at the US Tech 100. And if I pull this up on a full screen, we can see that indeed there's been some uptrending over the past week even on the one-day candles. And if we wanted to, let's get rid of some of these lines from the past sessions. And if we wanted to see, is there a resistance level that formed today? Let's go maybe to smaller candles, 1 hour candles. And we see that an initial rise today and then a pullback over the last, say, 6-7 hours. And it looks like the movement is trying to bounce back up. So we see a support area here, okay? Back here, this was a price level that it took a lot of momentum to get above. And then as it came down to this price, it found support here and support here, broke through, but came right back up, finding support again on this price, support. It kind of seesawed around this price, again finding support right in this area. And again today, hitting this price and bouncing as we speak. Okay, so it looks like from a technical perspective, it may have found some nice support that it tested 1 hour, 2 hours, 3 hours, and now is finally trying to bounce off. So going with today's positive momentum, you could look for a take profit up near today's high up here, okay? And so stop loss distance would be less than your take profit if you got down below this support level, looking for a take profit up here, okay? Now, we could take a look at what is the signal on this. Okay, it is a buy signal. It almost outlined exactly what I just drew. And that's always nice. Sometimes I like to test the signal by first drawing my own technical setup with what I believe the fundamental news to be today, which we outlined before we looked at it. It felt more positive than negative, that maybe the equities, the indices could climb against the US dollar. Then we see a nice support level that we drew ourselves and a bounce that maybe it looks like it wants to test this high today. And then we take a look at the signal and it agrees with us, okay? And sometimes you can work in reverse. Look at the signal, then look at the chart. But sometimes I like to test myself without being biased by looking at the signal first to see if what I see is what Trading Central saw. And sometimes it is, sometimes it isn't. But in this case, I feel like the signal backs up my thinking. And so then I might say, yes, I would like to buy on this, okay? And so then I would put my take profit probably at today's high or just before it. So maybe 18,610. Okay, stop loss. Probably if it has momentum, it shouldn't break the support level. So down here around 18,520. And so my potential profit is better than double my risk, okay? And now I just need to adjust the trade size to be a size that I'm comfortable with. And so going into your trades, you should have an idea of how much you want to risk per trade. Maybe that's a flat dollar amount or euro amount or pound amount, or maybe it's a percent of your balance each time. I usually use an example of 1% of my balance per trade, but it could be a different number than that, obviously, depending on your risk tolerance and preferences. But if I'm going 1% of my balance, it'd be around 660, 650 per trade. So I need to cut this trade size in about half to be in that range. So quarter of a lot, I'm risking 650. Okay, and that's to make 2 to 3 times that if I'm right on the trade. Okay, so I can make a move like that that's in the direction of the signal. My stop loss is below the pivot line from the signal. It's the line that it says if it goes to the other side, then don't follow the buy signal. That's how those signals are set up. And in that case, you would have a pending order to sell. If it breaks the support level, you could put a pending order down here even now, so that if the buy move goes bad and it breaks the support level, then because it broke the support, that technically is a downtrend then, and you could have a pending order that would trigger at the same spot that your stop loss is for the buy. Okay, you don't have to do a 1-2 setup like that, but you can. I tend to try and go in the direction of how I read the fundamentals, but it doesn't hurt to have those pending orders in case some headline hits that changes the fundamentals unexpectedly. Okay, so I could put a pending order below the support level down here to sell if I wish. Okay, and now something that I don't know if you're aware, if you go to where the open trades are running, okay, and we're just getting started, it's slightly in the profit, but obviously that can swing either direction in the early parts of a trade. If we take a look at the chart then for an open trade, we can see that we can adjust the stop loss and take profit in real time. So if I look at this and I decide, you know what, I want my stop loss below this wick, in case it tests it before going up, I don't want it to hit my stop loss unless it really breaks the support level. So maybe I move my stop loss below this wick now that I look closer at the chart. So it's below this support level from today, and it's below the support level from last week where it closed on Friday. It would have to break Friday's close price below that to hit my stop loss. Okay, so I've slid my stop loss down. It adjusts it automatically when you drag these lines. My take profit, same thing. I can slide it around if I decide, you know what, I want it to be just before the top of this wick. So it doesn't have to break the high point of that candle to hit my take profit. So there I just slid it down a little bit. So you can make minor adjustments as you look at the chart in real time, anytime that you wish as the trade is running. Okay, so very easy to adjust the setup of your trade once you've opened it. Just as easy as it was to set it up, it's just as easy to adjust it once you've opened it. Any questions, comments on what we just covered? Whether it's about the signal or the risk management, the trade we opened, I'll pause for a moment. Okay, and if I see any questions pop up, I'll address them as I can. All right, so we could switch categories or we could switch countries. I can punch in 100 again and we can go to the UK 100. Many times the global markets are in the same direction. We can switch regions, we can switch countries. It also looks like this has been trying to climb on the 1 hour candles and that it found some support. If I want to draw a line, it found some support here a few hours back, okay, which is an old support level, just like on the US 100, on the FTSE here, it also found support last week at this price, tested it a few times, tested it a few times, weaved around that price and found support back on top of it again. Exact same setup as the US Tech 100, okay? Very similar, also trying to bounce off this support level. Also, your stop loss could be below that support or below last week's support, down a little lower. Very similar setup, okay? And you'll see that not just within the same instrument type, meaning not just within the indices, but also many times across different currency pairings that are maybe Euro USD, GBP USD, etc., also can look very similar on days like today, where the market is being driven by an overall general sentiment without big news out of one area or another. And so maybe we switch instrument classes. Let's look at something like crude oil. Okay, and we can see that there is a signal on crude oil. It's a buy signal, but this buy signal already is invalid. It says the market has already reached a key level, and you see it broke the support level. Now, of anything, this doesn't surprise me that this signal went bad. And let me explain the fundamentals behind it. Since coming into today, the positive feel was because things are slowing down in the US housing market and slowing down maybe in general globally to where inflation is dropping, while the equities, the stock market likes that idea because interest rates could come down sooner than in places like the US. The fact that things are slowing down is kind of bearish for something like crude oil, because that means there will be less demand for energy if major economies like the US are slowing down from all the higher interest rates. Okay, so it doesn't surprise me that this buy signal was not in line with what actually happened, and it broke that support level. So now this is a sell signal, okay? And so just as I said, there are examples where I agree, my technical analysis agrees with the signal. Here's one where I wouldn't have agreed fundamentally from the beginning. And that's where fundamentals can help you pick and choose what signal do you want to follow and what one don't you. Yes, the USD was a little bit weak today. And so maybe commodities could climb against the USD, but something like crude oil has a reason to be bearish when the optimism is about economy maybe slowing down more than expected. And so the take profits now are these lines down here, the red lines, because the pivot line got broken. The pivot line was the support line. When this signal came out as a buy signal, the price was above that pivot line. And the rule is if it breaks below the pivot line, then the buy signal is invalid. And now it's a sell signal with expected dropping towards these support levels down here. Okay, and it tells you that here, sell scenario. Below 81.65, look for further downside. Okay, it broke below 81.65, so they're saying look for further downside. Okay, so if we then look at the chart for crude oil, it's not hard to imagine that this could drop towards the next support level. If we go, let's go maybe 2-hour candle view will be a little nicer. And we see that it is downtrending. It broke this little support area. And the next spot where I see support is down here. Okay, right in this area here, where it's tried to drop, couldn't, and went back up with a bullish candle here. So if this is now downtrending, it looks like it could be trying to drop down towards 81 or so, or just below 80, 90, 80, 75, this area right in this range here. Okay, so this is what I see on crude oil. I see it's a failed buy signal, which again doesn't surprise me with the fundamentals today. And it looks like it's an open sell signal now with take profit suggestions around between 81.3 and 80.8. And I just drew my support level at 80.84, which is in alignment with this zone here. Okay, so again, my technicals line up with the technicals in the signal, and based on support level down here, 80.84, they're saying somewhere between 80.8 and 81.3. So if I was going to make a move, I'd be selling on this. Okay, stop loss up above the pivot line that it broke, somewhere up here, maybe at 82, and take profit down here around 80.85, something like that. Okay, just an idea. It's not something you obviously would have to act on, but that's what I see within the crude oil signal. Now there was a request for the S&P 500, so let me pull that up. It's probably going to look similar, Yulia, to the U.S. Tech 100 and the FTSE, because it's the same overall kind of global momentum, and that's what we see. Let's go to 1 hour candles maybe. We see this upward move, we see a pullback, and we see a support level trying to hold right here. Okay, again, here's the breakthrough from last week. Here's a downtrend finding support, weaving around that support level, up and down, up and down, up and down, and reestablishing support on that same line, and confirming that again today with a bounce. So this looks like a buy with your stop loss maybe below this support level down here for a small risk, and your take profit somewhere up either towards today's high or higher, depending if you think the momentum can carry. Okay, again, much smaller risk to my stop loss than what I could make with my potential take profit somewhere up in this area. Okay, looks like the same trade as the US Tech 100. Okay, same sort of setup, except this one did indeed break the pivot line. Oh no, this is the crude oil. Sorry, it did not break the pivot line. This is the crude oil image still, but this is the US 500 setup, not breaking this support level here. Okay, and if we look at the US 500, let's see if there's a signal on it. There is, and let's see if it's the same as the Tech 100. It is. It's a buy signal. So you see the support level, the pivot line is drawn just like we drew our support level. So again, we're testing the signal here with our own technical analysis. There's a support level right here that we're just above, and that's where they drew the pivot line. So you can start to see the technical analysis of these signals is based on real price levels. It's not just made up from Trading Central. They're analyzing the charts, and they're drawing the support and resistance levels. And this is a support level that they say, as long as it stays above, then expect further climbing towards these prices up here, which is where we put our first take profit level here. And if you're more patient, maybe a take profit up at the next resistance levels up higher. Okay, so take profit zone somewhere up here, similar to what they're saying here. Okay, I think we have our take profit at this first resistance level here for a scalp, and you could go to higher levels if you want, like I'm showing here and here and here. Okay, all right, so again, we could switch, go to something different. Maybe we look at gold. Interesting, gold, because it's a safe haven, so it tends to go up when there's fear and down when there's not. But it also, gold tends to rise if the USD is weak. So it's an interesting thing. It's moving in the same pattern as the equities today. Okay, we see the rise up with the positive momentum today. We see the pullback. We see the support level holding. Again, similar to the US 100, the UK 100, we see support, 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 up, back down towards the support and trying to bounce. So gold also looks like a buy right now, not so much because of high fear, but because of a weak US dollar right now, with anticipation that maybe rate cuts could come sooner than expected if indeed the housing data continues to be weak. And depending on the rest of the data this week, leading up to the FOMC speeches on Friday. Okay, so this looks like it might try to bounce back up towards this level up here where it was earlier today. Just 6 or 7 hours ago, we were up near 2,200 an ounce. So That's a good $24, $23 up from where it is now. And your stop loss, you don't have to risk that much to get below the support level. And you can take profit before today's high and still have a much better potential profit without having to break any resistance levels compared to the amount you're risking. Okay, and you could put AvaProtect on this as well. For a small cost, by the hour, by the day, you can protect the trade that could have a much larger potential profit depending on your trade size. Okay, if I put half a lot, okay, and I start looking at the cost of protecting this by the hour, less than a couple $100, and that's 50 ounces of gold, half a lot. If this comes up $20 an ounce, I could be making 1,000, and I'm only paying protection without even having to break today's high. I could make $1,000 on this trade size, and my protection is like 1/10 of that, or 1/5, 15% of the potential profit. So if you're right once out of, I don't know, 5 or 6 tries on a setup like this with protection, you could be still an overall profit. But you don't have to do the protection if you don't want. You can also use a stop loss. Okay, so down here at 21.65, even a little higher gets me below the support level. So let's say I say 21.67 for my stop loss. Take profit could be up here at 21.95 without having to even come close to breaking today's high. And so my potential profit is almost double what I'm risking. And now I can adjust my trade size to risk the amount that I'm comfortable with. So if I do 0.6, I'm risking just under 600, 0.7, risking 697 to try and make 12 or 1300. Okay, so around 1% of my balance risk, sticking to kind of the example risk stratification that I'm showing you. But it's easy to calculate the risk that you want to have, whatever that is for you. Again, it doesn't need to be the 1% number that I use as an example. It could be some other percentage of your balance that you want to risk per trade. But the point is, you can calculate it very easily here with the tools that exist within the order window on our web trader and on the AvaTrade Go app. So we've got a couple trades examples going. That one that we opened earlier, it's already almost $300 in profit. If you're a scalper, this is an easy way to make profits. You find a nice support level that it's already bouncing off of, like we did. And if it's in the direction of the current momentum, which it is, positive momentum today that we felt going into the trade. So you usually, at least in the short term, get it going in the right direction. And the advantage of scalping is you take that profit before the news can change. So now I close, I take my quick $300 or $400 profit, and I move on. And you could do that with lots of trades. Just finding opportunistic entry points above support levels, below resistance levels that are already reversing and that are going in the direction that you think the fundamentals will carry it. Okay. And this one we'll leave run, see what happens with this one. But I think this is a good place to stop. Does anyone have any questions, comments before we wrap things up? Okay, I must have been pretty clear. I don't see any questions. So the point of today's session was really to show how simple it is to combine some of the tools, in this case, the signals, the risk management tool within the order window, and your own technical analysis, manual technical analysis, to combine those together to create a strategy that you can be confident about when you also, the last part of that is combine that with what you feel the fundamental sentiment is for the day. So trading only in the direction of the sentiment and only from opportunistic entry points that you find with your technical analysis, and hopefully aligning that with the signals. And if it goes against the signal from Trading Central, then it should be because you believe the fundamentals are in that direction if you're going to go in that opposite direction. Okay, and so we've had examples of each of those scenarios within the session today. All right, everybody, so thank you for joining. My next session will be Thursday at 11 a.m. UK time, and we'll spend a little more time on the fundamental side of things, and kind of makes sense. I think we've got some nice announcements on Thursday afternoon, and also leading into Friday's speakers out of the U.S. about monetary policy. Okay, good luck with your trading between now and then, and maybe you'll find some nice movements this evening still. I think there are some that are just getting going again, as we saw here. All right, bye for now. Good luck.